Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play on Friday. Okay, so first up, let's take a look at ENRJ. It made had a nice gap up open. If you look here at the daily chart, you can see that it started the day off well above the upper Bollinger Band and the 200 and 300-day simple moving averages. This was the open, and then the share price ran above our key resistance level to break, which was the closing price back here on April 10th. And so we put out alerts in the chat that it needed to close above that level today to remain in play. And so it ran up to 85. But it pulled back and it formed this long upper wick, and when it crossed below this closing price on the 10th, it made it a risk to hold. The black candle forming was another red flag. These are all signals to head to the sidelines. The next red flag was when it broke below this 55 support level. That was a high close support from back here in April, and so that signaled big downside risk. Notice the bounce was off of July high close horizontal support here. If it breaks below that level and the candles work back into the bands on Monday, the key levels to hold are going to be the 200 and 300-day simple moving averages here at 35, the red and blue line. Just below that is EMA4 at 32. It needs to stay above the middle Bollinger Band at 29 to keep the uptrend going. There is a gap all the way down to the top of the candle from Thursday. So yeah, if you take a look at the ENRJ 15-minute chart, you will see what we call the bull trap. There was the big gap up open, the run to high of day, and then the pullback. And then notice that there was the long upper wick followed by the red candle. This was the climax spike. The climax spike just happened to form at the very beginning of the trading day, and then the share price was faded throughout the rest of the day. So the key for this play was to lock in gains on the first candle of the day, and then be sitting on the sidelines waiting for the next entry point. You can see here when the middle Bollinger Band support level broke, it signaled more downside risks. The candles have been riding EMAs 4 and 8 support lower. It's currently hitting the 50 simple moving average at 374. That's the green line. That's the key level to hold. If it drops below that level, then you've got the 200 and 300 simple moving average and the 100 simple moving average down here between 29 and 32. So those will be the big support levels below. It's really crucial that it bounces off this 50 simple moving average. If that turns into resistance, that will signal more downside risk. Okay, take a look at DXTR. Okay, it closed up 40%. This had a nice bounce. If you look down here, it had closed below the lower Bollinger Band on the 19th, on Thursday of last week. So, but notice that this candle's an open red candle. This was the open down here, and the close is up here. So even though the share price was down on the day, the bulls were able to drive the share price off of the low into the close. So they were strong. That was signaling the bounce play was in progress, and then the candles on Friday worked back into the bands. Notice there was a close above the pink line. That's EMA4 at 17.4. That's the key level to hold. The last close above that level was back here on the 11th. Notice how it's been big resistance during the downtrend. It needs to stay above that level to remain in play. If the share price drops below EMA4 and closes below that level, the bounce play will no longer be in progress. It will be a risk to hold. It could continue this nasty downtrend. The key level to break is EMA8 at 0.188. That's this lime line. It has to close above that line next and then break EMA13 at 20 to head to that middle Bollinger Band, which was tested on Friday. In order to get a new uptrend going, it's got to close above this dotted purple line and turn it into support. Notice there was a big volume spike, PSAR bull flip, and MACD's pinch down here. So yeah, keep an eye on DXTR. We'll see if it can continue the bounce play. Okay, take a look at RPRX. Okay, so it is in the bull zone over here on RSI. You want to see Fasto get above 50. This is another bounce play. It had a bullish reversal confirmation on Friday. Notice this black candle formed inside of the previous red candle on Wednesday of last week. That did form bullish homing pigeon reversal pattern. And so what bulls were looking for was bullish reversal confirmation, and that did happen on Friday. So there was a bounce off of the middle Bollinger Bollinger Band at 46. That signaled that this uptrend was intact. And then the close was bullish. It was above EMAs 4, 8, and 13. So bulls want to see that level turn into support. You want to see candles start riding above EMAs 4 and 8 again, heading higher. The key resistance levels to break are going to be this high close just above 60 from July, and then the bottom of the gap, which is at about 63. So if it can get back above those two levels, then the 200-day simple moving average at 74 will be back on deck. If it closes back below EMAs 4, 8, and 13, that's going to be a signal that the chart is broken again, downside risk. If that middle Bollinger Band breaks and turns into resistance, then you could see a drop down here to test the 50 and 100 simple moving average down here at 37 and 39. In order to keep this good uptrend going, it's got to hold that middle Bollinger Band. This was a really nice bounce off of this level. We talk about that a lot, about playing the middle Bollinger Band during an uptrend. This is the classic example. Now it just needs to follow through and work its way back up to that 200-day simple moving average. Okay, take a look at HMNY. Okay, this is the classic EMAs 4 and 8 chart. If you look here, we got RSI that is in the bull zone at 53. It's still oversold on Fasto at 17. Notice how the green line and red line are pinched. Bulls want to see that green line cross over the red line and break above 20. That would be a signal the chart's heating back up. Notice there's this declining pattern, this falling wedge, whatever you want to call it. It's signaling downside risk since the close below EMA 4 here on the 12th. And so the candles worked their way down to the middle Bollinger Band, and we were looking for a bounce off that level. We did get a small bounce off of 1644. That's the middle Bollinger Band level that's lined up with this line, horizontal support line. If there's a close below that level, it's going to signal downside risk. If the middle Bollinger Band turns into resistance, that's going to be a signal the chart is broken, and then we'll be looking for a gap fill. There's a really small gap down here, just above $11 between these two candles here, and so that would be the target on the downside. Now, in order to head higher, it's got to close back above EMAs 4 and 8. Currently, EMA 8 at 1810 is the key level to break. It has to close above that level. Notice how it's tried for several days in a row, but it's broken that level intraday, but it's failed to close above. A close above that level will be the signal that it wants to head higher. Failed to break, and that's going to signal more downside risk. Okay, take a look at ANTH. This is another stock that had the classic bounce off of the middle Bollinger Band during an uptrend. You know, the share price had this nice spike here, and then it worked its way back to the middle Bollinger Band, and the 100-day simple moving average at 153. Those levels held, and then on Friday there was this nice close back above EMAs 4 and 8. It's hard to see over here, but this at 166, it's above 164, which is the level of EMAs 4 and 8, and that is signaling more upside potential. So what we'd like to see is if that middle Bollinger Band holds, that's going to signal the uptrend's intact, and we want to see it work its way back up to this 190 high close level. That's also lined up with the upper Bollinger Band, which is the top of the channel. So that 190 is going to be the target. If it can break back above this 180 resistance zone now, that's this recent high close, so it's going to have to get above that level to head higher. But yeah, this is the signal on Friday is that this will be the next key level to break, and then this high close here. And so the move on Friday is signaling that this uptrend is still intact and that there's more upside potential. Okay, so it's holding support and it's pushing higher. It just needs to keep that pattern going. If there's a close below the middle Bollinger Band, that'll be a red flag that the chart's cooling down. And then the big level that holds this 100 simple moving average and the 50-day simple moving average at 147 and 153. As long as those levels are holding, there's more upside potential. If those levels break and turn into resistance, that'll signal downside risk. Notice the candles were trading below the green and gold line during this nasty downtrend, and then they broke above starting here and back here in September. They started breaking above the 50-day simple moving average, and then again here in September it turned into support, and then the candles have been turning the 100-day simple moving average into support. So those are signals that there's the chart is starting this new uptrend with more upside potential. It's got a good trend going. Yeah, and so if you look here, just real quick, let me draw. You know, because we had the I just erased that, so you can see there's this uptrending channel here. And if we draw the ascending resistance line. We can get an idea of where this could be headed to the upside. And so if it breaks above that 190 high close resistance level, the top of the channel now is up here at 210. So notice how it hit here, came down, hit here, came down. So the next one will be up here near 210. Okay, and now finally let's take a look at GBSN. Yes, this does trade over the counter now, but it did heat up last week. It's been on this nice uptrend. So take a look at the chart back here. It got an uptrend going, over here in September when it turned this middle Bollinger Band into support. The middle Bollinger Band held, and then what happened on Thursday was there was a break above resistance. So this white candle here from Thursday of last week was a big move above 9-cent resistance. Notice how it was huge support here, and that did signal more upside potential. Now the share price is hitting August support, which turned into resistance, and so what we're looking for is a break above that next week and a run eventually up here to the 100-day simple moving average at 19. How I just showed you on the last chart with the top of the channel. Notice that the ascending resistance line on this stock is lined right up here with this 100-day simple moving average. So same thing here. It turned the middle Bollinger Band into support. Now it's turning the 50-day simple moving average into support at 7. This is the bouncing off the bottom of the channel. Now it's breaking out, and it could make a run possibly up to the top of the channel in the 20s and test that 100-day simple moving average. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.